Hey, welcome everybody. This is Grant. So I wanted to talk about measuring an effective market. And the market that I'm going to use here is the E-minis. And this is actually from today, June 27th, 2017. And so I wanted to go back and talk about, these two charts here. So the left-hand side is the market effectiveness chart. The right-hand side is a price chart of the E-minis. All right, intraday trading. All right, what does it mean to be an effective market? So as you know, there's a lot of things that go into movement of price, right? There's a lot of things that actually comprise a market, and the market is just, I should say the price is just the outcome or the effect of the things going on in the market itself, such as, the number of participants that are in the market, the number of buyers and sellers, the levels at which they're trading, so the amount of actual transactions and what's on those transactions that are taking place. Obviously, context of the world itself, news events that are taking place also, the days of the week, all sorts of things, time of the day even. All of those affect the market and actually define the market, I should say, and they ultimately impact price. All right, so price becomes the outcome of all of that. And so to be able to trade price, we actually have to understand a little bit more about what's going on underneath and how effective the market is being at moving price. And the basic premise is that when they're in alignment, then you have higher probability opportunities, right? You want to align with that. When the market engine elements and price are in fact going the same direction, there's your opportunity, right, to make some profits. When they're misaligned, that's actually a very key point where you actually want to take note of that. All right, so I want to examine 4 or 5 different places here today. The first one here is, if you look on the left-hand side, the market opened, and the market effectiveness chart, I'm on the left-hand chart, it was trying to push down, but wasn't going down much. But if you look on the right-hand chart, on the price chart, price was actually dropping quite a bit. But you'll notice that even though that is a little bearish on that effectiveness chart, it certainly wasn't moving to the same kind of degree that you find on the price chart. What that tells me and told me, and I actually traded that, was that is a weak sell-off, right? Those two are not aligned. And I know because here comes a gear shift right here. This was at 8:44 Chicago time. There's a gear shift that occurred, got just about down here, and finally it says, look, I'm really misaligned, right? The market engine elements are not that weak at the moment, whereas price is continuing to plummet. That misalignment was just a confirmation of what I was seeing visually. It's like, hey, these two are not lining up. So I just waited for the opportunity for it to break back up and take the trade up. Now, as you follow it to the right, again, I'm on the left-hand chart. If you keep following it over here to the right, you'll see the net effect is continuing to rise, right? So it was in favor of bullish prices. And we see on the right-hand chart, as I move my mouse, it was in fact doing that. Quite a bit choppy, but nevertheless, the overall effect was it was moving up. Now, as you come here to point A, there's a very evident gear shift that takes place, meaning the correlation comes down, it's misaligned between the engine elements and what price is doing. And typically the way I trade that is I look to the left. So I go on, now I'm on the price chart on the right, and when I get that gear shift, I go look at the price chart and I say, well, so what's just been happening recently? What is the effect here? And well, it's been coming down. And in terms of price over the last 3 to 5, 7, in essence, it's come down a bit, chopped a little bit, but it's dropped down. And it's misaligned with that. And it says, well, okay, if that's come down, then it's misaligned in terms of it coming down. And what is the market effectiveness chart telling me? Well, it's saying it continues to push up. So, there was the higher probability trade as it continued to move to the upside, right? So that's certainly a way to trade that. Now, I want to point out this next one. It's B1. So B1, if you look what's going on here, the reason why I want to point this out is because you never trade the market effectiveness chart by itself. You always look at what's going on with the actual instrument. Okay, so the market effectiveness chart, when it does this gear shift, it's saying up, sit up, get on the edge of your seat, take a look, see what's going on. Now, if you look at the market effectiveness chart, it continued to push up, but here there's a pause, there's a hesitation, right? So it sort of slowed down in its rise, but it certainly hasn't broke down below that green line. In any event, you look here on the right and you say, well, what's price been doing? Well, price is coming down, right, in the last 2, 3, 4 bars here on the right-hand side at B1. So you're looking at it going, well, wait a minute. Price is really starting to come down. The effectiveness chart, while it's started to pull back a little bit, quite frankly, it's not broken anything. So it's starting to tell me again, there's misalignment. When price is pulling back like this, it gives me this this gear shift. It's saying I'm out of alignment with where price is going. I'm continuing to hold. And if you want confirmation, because sometimes that's disconcerting, right? You look at that and you think, how can I trade that? That makes me a little nervous to think that what you're saying, Grant, is that the trade opportunity is still to the upside, but price is going down. Well, yeah, the effectiveness chart isn't following suit, and if you can't continue to move to the right, you'll see that price starts to go up, the effectiveness chart pushes up. But if you really want confirmation, that's why I put B2 on here. Now, the thing I wanted to point out is this. If you look across the top here, when the red line is at the top here, if you see my mouse on the left-hand chart, when it's across the top, that's saying that the internals of the market engine elements and price are in fact aligned. They're going that direction. So if you want the confirmation, you're like, okay, this is too scary. Then you wait for it to come up here and you look right there and you go, what's it telling me? Well, it's telling me that the effectiveness chart continues to push up, and now what's price doing over here at B2, it also is going up. And so it's saying, you know, this market is in alignment when price is going up because the market effectiveness chart's going up. So there's my higher probability opportunity, is to trade that to the upside. Okay, let me go point out just a couple others. This was a huge day for trading. Fed Chair Yellen spoke. There's also Federal News, which didn't really move it much. So that movement, or the news and the effects that came out of that really pushed the market down. So the opening of the day was to the upside. Initially it was a little weak, but then it got stronger in the first 2.5 hours of the morning. But then it starts to shift. And a couple things I wanted to point out. So I put a little trend line up here on the right-hand side, and then down on the bottom. This is the market engine indicator, the green line. And these two have become misaligned, right? So that's another misalignment. It's saying, you know, there's some divergence going on there, right? You never trade them just exactly, but there's a telltale right there. Thing I wanted to point out here was C1. So here we get, and I skipped a whole bunch of other gear shifts. Here's C1, so we got some misalignment going on. So if I look at the price chart on C1, I think, well, there's not a great, there's not a real clear structure there. Yeah, it came down, then sort of came up again. My point in showing this is, if you're not clear, and if it's not giving you a clear, then don't trade, right? Just be careful, be safe. Here's D1 and D2, which things start to clear up. If you look at D1 on the market effectiveness chart, big push down here, market effectiveness chart comes down. You think, well, okay, where is it aligning on D2? And as it starts to come up on D2, D2's here as it's saying, you know what, this is going down. And it was down the rest of the day, right? So here you've got some confirmation with the market engine indicator going down on D2. Obviously, price is going down. The correlation over here pushes up saying price is going down, the engine elements are going down. There's your high probability opportunity. That makes it even safer to do that. Okay, that's it for now. I would suggest you continue to look to the right, on these charts that I put here on financialinvestingradio.com. look to the right, and look for other gear shifts and practice identifying, okay, what's happening right at that moment? What's happening on the market effectiveness chart? What's happening on price? What would give me the confidence to then take a position in a certain direction? Hey, thanks for joining. Until next time, trade safe.